Welcome to a Now Explain Rough Cut video. This video is part of our manual bookkeeping series. You can find related videos on our YouTube channel or search the internet for a Now Explain Rough Cut. So now, let's get explaining. Supplier ledger cards. What is a supplier ledger card and why we use them in bookkeeping? What you need to be familiar with: source documents, purchase invoice daybook, purchase credit note daybook, bank payments daybook, general journal daybook. The daybooks will be used to supply data to prepare ledgers, the ledger cards. Other terminology you should understand: T accounts, debits and credits. Here is an example of a supplier ledger card. The supplier name and an account code can also be attached for easier reference, in this case B1. So this is displayed at the top of the card. Here's a payment made to the supplier. So this information was taken from the bank payments daybook on page 1, that's the BP1. Purchase invoices received from the supplier. This information was taken from the purchase invoice daybook on page 1, PI1. And here is the amount owed to the supplier at the end of the month, which should match the balance on their statements sent to you. The supplier ledger card accumulates information from the invoice daybook, the purchase credit note daybook, and the bank payments daybook. The line value recorded for each transaction in the total column in the purchase invoice daybook and purchase credit note daybook are recorded in the supplier's ledger card. So here are the line items posted to the supplier ledger card. Here's the ledger card and purchase invoice daybook side by side. And here are the two supplier invoices recorded on the supplier ledger card. The supplier ledger card accumulates information from the purchase invoice daybook, the purchase credit note daybook, and bank payments daybook. The line value recorded for each transaction in the supplier's column in the bank payments daybook is recorded in the supplier's ledger card. So here's the line item posted to the supplier ledger card, the payment. So here's the ledger card and bank payments daybook side by side. And here's that one supplier payment recorded on the supplier ledger card. And we've taken the value from the supplier's column. So here is an empty ledger card ruled in the T account layout. So we're going to add column titles at the top for each page for both the debit and credit sides of the ledger cards. So we're going to add our supplier name and account code to the top of the card. One ledger card is required for each supplier. You can prepare each ledger card in advance or create a ledger card for each new supplier as you discover them. Now, we need to add or post supplier invoices to a supplier's ledger card. So let's take the first invoice and post it to the supplier's ledger card. The first line from the purchase invoice daybook is shown below. We are posting to this supplier's ledger card, or one red box supplies. The first supplier invoice in our daybook gets posted to the supplier's ledger card. We repeat for each invoice in sequence. Don't skip any invoices. This is the second invoice in the daybook. This is the third invoice in the daybook getting posted to its ledger card. And this is the fourth invoice in the daybook, and so on. As we progress through the daybook, we meet more invoices from the supplier, all colour blocks. We are posting to this supplier's ledger card, all colour blocks. We are posting a second supplier invoice from this supplier. It is recorded under the first invoice in the ledger card. We also need to record or post supplier credit notes to any relevant supplier ledger cards. Let's take the first credit note and post it to the supplier's ledger card. The first line from the purchase credit note daybook is shown below. We are posting to this supplier's ledger card, or one red block supplies. The first supplier credit note in our daybook gets posted to the supplier's ledger card. Repeat for each credit note in sequence. Don't skip any credit notes. There are usually fewer credit notes compared to purchase invoices, and in this case we only have one credit note for the month of January, so only one supplier ledger card needs updating with purchase credit notes. Now we're going to add or post supplier bank payments to a supplier's ledger card. Let's take the first supplier's payment and post it to the supplier's ledger card. We have set up an analysis column for supplier payments to make it easier for you to identify supplier payments. This will also help you later when you are preparing the general ledger accounts. The first supplier payment line from the bank payments daybook is shown below. We're going to post to this supplier's ledger card, R1, Red Block Supplies. The first supplier bank payment in our daybook gets posted to the supplier's ledger card. Repeat for each supplier payment in sequence. Don't skip any supplier payments. Here is the supplier ledger card showing the bank payment made to this supplier. The bank payment is recorded on the debit side, the left-hand side of the ledger card. There are usually fewer supplier payments compared to purchase invoices, and in this case we have only 2 supplier payments for the month of January, so only 2 supplier ledger cards need updating with bank payments. This is the second ledger card to be updated. Let's calculate what we owe to suppliers. After all the supplier invoices, supplier credit notes and supplier bank payments have been posted to the relevant supplier ledger cards, it now comes the time to calculate how much is owed to each supplier. The difference between the total of the credits and the total of the debits is the balance owed to this supplier. Both sides of the T account must balance. To make them balance, we must put in a balancing figure on the lowest side of the T account. The total of the debits is 45 plus 225, which is equal to 270. The total of the credits is 225 plus 90, which is equal to 315. To get the debit value equal to the credit value total, we need to record a balancing figure of 315 minus 270, which is equal to 45. Here's the ledger card with the balance value of 45 entered to allow both sides, debit and credit, to be equal to 315. This value will be carried down to the credit side of the ledger card. To complete the ledger card, you must do the following. The balance to be carried down must be brought down to the credit side of the T account. The BD value, the brought down value, is now both the closing balance for January, what is owed to this supplier, and the opening balance for the month of February. The balance CD, carried down balance, is used only to balance the account. It is the balance BD, the brought down balance, that is to be taken as the value owed to the supplier. Supplier accounts usually should show a credit balance, and in this case the balance BD value of 45 is on the credit side of the ledger account. Here are the completed supplier ledger cards. The use of red underlining and red text helps identify the supplier balance, and it looks nice. You can now create a list of suppliers who you owe money to. The balance BD from each of the supplier cards is listed below. The business owes in total 771 to suppliers. So what have we learned? We've learned how to record and calculate what we owe to each supplier. We were able to produce a list of which suppliers we owe money to. We have taken transactions from the following daybooks: Purchase Invoice Daybook, Purchase Credit Note Daybook, Bank Payments Daybook. We learned about balance CD, the balance carried down, the balancing value to allow the total debits equal total credits, balance BD, the balance brought down, the balance value to be used as the amount owing to a supplier. For more information, go to nowexplained.com. Thank you for watching.